Well, happy Friday to you. So glad you could join us here this morning here on the Market Day Report. I'm Marlon Bowling, your tour guide to the ag commodities. Well, let's bring in our first guest here. We have Brian Hoops on the line, and he is the president, El Presidente of Midwest Market Solutions. He's based in Springfield, Missouri, and he joins us right now. Brian, I see where, as I was getting ready to come into the studio here, we had a little blurb from USDA on the wire. Wanted to share that with everybody. It was an overnight export sale, but it was 122,000 tons of soybeans sold to unknown destinations, and that was it. Brian, I mean, we're glad to have the sales. We like seeing these export sales show up here on the overnight runs, but we haven't had any 1 million ton sales, 2 million ton sales that we really got used to last fall. I mean, everything is kind of a paltry number, maybe at the most around 300,000 tons here so far this fall and heading into the winter, but we've got to pick it up if we want to get anything really accomplished, don't we?
Well, you're absolutely right, Marlon. It's good to see some sales being reported. You know, it was Reuters who reported that China had bought 3 to 4 cargoes of soybeans from the United States earlier this week. Excuse me. But now the news wires are kind of picking up that exporters have announced these sales yesterday to China and to an unknown destination. We saw that yesterday and again today. The thing to watch here, as far as our export business goes, I think is South American weather. We're starting to get a little bit drier than desired, southern Brazil and into Argentina. And that dryness, if it persists and if it continues, it will trim the crop sizes out of South America, and it'll force China and these other buyers back to the United States and start buying aggressively. It was a year ago, because it was dry in South America, that we really started to see this buying interest pick up. And without any dryness, China's kind of just ready to buy what they need, and they're buying all the way out into January right now, just waiting for a little bit, weather to rear its head. If it continues to be dry, it's bullish for U.S. exports, and our ending stocks will get tighter. So it kind of just comes down to weather at this point. If it get a lot of rainfall, China and other countries will assume that Brazil, Argentina are going to grow a big crop, and we won't see that export business improve.
Is there any news on the December delivery front or not?
Yeah, we saw some really heavy deliveries early in the week against Chicago wheat, and that did pressure the wheat market. But since that time, we've started to absorb these deliveries. Deliveries have gotten less and less and less. And that's what typically happens when you go through the delivery period. Heavy deliveries the first couple days, deliveries get lighter, and then you start to see a rally post-delivery period. And we're starting to see that in corn, soybeans. So weather's helping out. The lack of deliveries against those commodities are helping the market to rally. And, in the wheat market, we were rallying yesterday, anticipating bullish numbers from Stats Canada. Then we saw low profit taking after that report was released this morning.
Well, we did have a bit of a bounce in the corn and soybeans overnight. Let's take a look at our Globex trade as we wrapped up here a little bit ago. With our quotes provided by bar chart, you have March corn 4.5 cents higher overnight at $5.81 per bushel. In our soybean trade, we had January up 16. Look at that, $12.60 and March was up 15 3/4 last night. On the Chicago wheat market, you had that March contract down 2 3/4 cents at $8.12 so going the opposite direction here from the corn and soybeans. In the Kansas City trade, you had March down 6 3/4 at $8.35.5. And in Minneapolis wheat last night, that March contract was down 10 3/4 at $10.31.5. So a lot of spread adjustment between the corn and soybeans and wheat in the overnight trade. We'll come back in a moment and we'll talk more with Brian Hoops, and we'll find out how the livestock situation is set up as we get closer to the weekend when we come back after this. Come on back. Well, we're talking with Brian Hoops right now of Midwest Market Solutions. And I want to take a look, Brian, at yesterday's livestock summary because, boy, we had some cash cattle market movement out there. And let's take a look at what the numbers were when the dust all settled, if you will. On the cash cattle trade around the country on a live basis, we had very active trade. In Kansas, price was 140 to 142, at least from my particular sources. And in Texas, 140 to 142 as well. Kansas had over 16,000 head, Texas over 8,000 head that were sold. And we had Colorado over 12,000 head that were sold at 141 to 142. And in a dress basis, we had Nebraska over 17,000 head were sold 220 to 221. And in Iowa, over 12,000 head were sold at 218 to 220. Sounds like most of the action was hovering around the 220 mark there. That would be, what, about $3 higher than what we had last week? So what a way to wrap up the week here in the cash cattle market. All of a sudden, things shook loose and a much higher trend. How much will that impact our futures trade today, do you think?
Yeah, it was a very strong cash week. We went home on Friday of last week with a big sell-off, and that continued into Monday. Show lists were actually 15,000 head larger than a week ago, and that was expected away in the cash markets, but it certainly didn't. The Packers have a big appetite for cattle right now. Numbers are expected to continue to tighten up, and so they were pretty aggressive in buying cattle. Now, the one thing you want to point out is today is option expiration for December live cattle. They go off the board regular time today, and then Monday is first notice day against December live cattle futures. And you look at that cash trade in that 140 to 142 range, we are likely to see some deliveries against December futures as they are trading discount to that cash market. So if you're long December cattle, be wary that you may be delivered on after Monday's close. But certainly strong cash markets. The cutout values are starting to turn a little bit higher. Steer weights that came out yesterday, down 2 pounds from the previous week, 8 pounds less than a year ago. That's positive. All those numbers that we were seeing are positive. In fact, exports, I think, were the second best in the last 4 months. So we've had some good numbers yesterday, kind of propelling this cattle market higher yesterday.
So we had that live cattle market finishing yesterday with the February contract 97 cents higher. We were at 139.57. And when we finished up yesterday's trade on the feeder cattle market, you had the January down a nickel, but all the other months were higher. Look at your March closing 42 cents higher yesterday at 168.32. And on the lean hog market, well, we finished up with the February contract gaining $1.87 yesterday at $82 even after dipping down below $79 there for a short time yesterday. Got as low as $78.95 and finished at 82 bucks. So that was a $3 bounce off of its earlier low of the day. By the way, the carcass basis cash hog market yesterday was down 8 cents across the country. Well, Brian, thanks for the time this morning, and I hope you have a good weekend out there. Brian Hoops of Midwest Market Solutions with us. Tammy, we're about ready to get this thing off and running here at the bottom of the hour.